Ghana, after the minority in parliament walked out in protest on Tuesday, the contentious electronic transaction bill, E-Levy bill, was enacted into law by a one-sided parliament. After the minority walked out, of course, before the second reading, the bill was passed after going through the different stages of passage in the House. Despite obstacles in passing the law, the majority has remained steadfast. The E-Levy is estimated to bring in about 6.9 billion cedis, $1.1 billion in tax income for the government, hopefully allowing it to alleviate the budget deficit. Joining us to discuss further, Olaolu Boboye, who is an economist with CardinalStone. Olaolu, good morning to you. Thank you so much for joining us. Fantastic. So the bill has passed. Well, it's passed, but the president still has to sign it into law. So that's the next stage. But what's the revenue implications?
Oh, that's great. So if you look at the fact that Ghana has been experiencing huge fiscal deficit and huge fiscal concern over the last few weeks, this is certainly a positive news to the market, right? When we check the numbers today, even from last week, we're going to see some positive reaction from the talks around 20% cut in expenditure down to the new levies coming on board, right? If you look at the transactions in Ghana, it's about 500 billion Ghana cedis. When you validate that on 1.5% tax levy, we could be seeing something close to 8 billion in revenue for the government, which should provide a bit of respite. But the key question is that significant enough to max the concerns that we're having at the moment? I don't think so, right? Because if you check the 2022 budget, the government had estimated about 43% increase in revenue. And a significant portion of this is coming from tax. The only policy that was initiated to make this work out was the E-Levy, right? About 24 billion Ghana cedis was expected from tax. And now the max that they could get is close to 10 billion, which means we still have about deficit close to 18 billion that the government still needs, to find a way around. So it's good, but then they
still need more money. I'm glad you mentioned the 1.5% margin, because it was 1.75, I believe, or 1.7 or so. They shaved off 25 basis points. Mm-hmm. So isn't that leaving money on the table, essentially, selling themselves short by having to reduce that?
Yeah, certainly right. Because if you look at what could be shaved off from the revenue, it's about 1.5 to 1.8 billion that they could have gotten from that 25 basis points spread. However, the economy is recovering. And if you look at the period of economic recovery, you need to stimulate the economy as much as possible, right? Tax will overlay burden on businesses and also pressure consumer wallets, right? So we think that could have been some of the things that are shaping the mindset and the thoughts of the parliament, Then it was adjusted 1.5 from 1.75.
All right, it's compromise, right?
Yeah.
You have to make agreements. Ghana has had a long-running saga with credit agencies. I'm not sure if it was Moody's or Fitch, where the Ministry of Finance was openly calling into question the experience of one of the analysts that had downgraded the government over these issues with budget deficits and so on. So with passage of this now, in the eyes of the credit rating agencies, how do you think they will take it? Could there possibly be an upgrade later on? How do you think credit agencies are going to review this? So
interestingly, right, to put in perspective in terms of the impact of these downgrades that we've seen, right? We've seen Ghana bond, trading close to 18% levels, when you look at the 2026, and at the moment it's a joke bond. And in fact, when you look at 2026, the spread between 2026 and comparable period with the US instruments, right, it's above 1,000 basis points, which is the benchmark for default, by IMF, right? If this will change the mindset of rating agencies, it might be too early to tell. But one of the key things that agencies are factoring in is the cut in the expenditure leg and the revenue leg. There are talks about cutting expenditure by 20%, cutting concessionary spending by 10%, and also with this new policy for revenue, it could give a bit of rethink for rating agencies. But then it might be too early. They might want to look at it for a while to see the dividends, the rewards that they will get from the policy before they can, come up with.
All right, perfect. Same question, but this time taking out credit agencies and putting in bondholders. Mm-hmm. You've already mentioned the movements in the Euro bonds and so on. Will bondholders be encouraged by this?
Yeah, so it has given a bit of calmness to the market, right? We saw some bills returning about 3.3% as of today. early hours of today, some about 1%, which shows that investors are already beginning to take this as a positive vibes to the market. Also, the cut in expenditure that came on board last week also give an additional vibes, right? But then they will need more convincing, because debt servicing is still elevated. Fiscal deficits could touch 12% when you factor in contingent liabilities. That's the financial sector cleanup and the energy sector debt, right? Debt to GDP is about 84%.
All this is still, so high.
Yeah, so it's still worrisome for investors, right?
Yeah.
Right. So even though this provides a bit of respite, there's still long-term concerns.
The CD. Is it the second worst performing currency? Worst performing on the African continent, I think, and then second worst after the Russian ruble or so. Again, does this? It's almost like this passage of this levy is supposed to fix everything, but does this? How do you see the movement of the CD following this?
So the CD is actually the worst performing in Africa, right?
Worst, yeah.
About 20%, as of this morning.
Wow.
But then, we don't think that this policy, the revenue, the e-tax levy could just automatically clear out the whole issue, right? But then Ghana still has about close to $10 billion in its reserve. There are talks about $2 billion syndicated loan, which could drive a reserve up to about $12 billion, right? The government, the Bank of Ghana has also turned hawkish. We've seen a bit of hawkish transition, 250 basis points hike in its benchmark rate. This is just to curtail the magnitude of outflows that are seen from foreign investors. But then, aside from the foreign investors, the most significant driver of this currency pressure has been locals. They're trying to dollarize the economy, are trying to take advantage of currency movement in order to benefit themselves. So if the central bank, the Bank of Ghana, could guard against elevated domestic demand, by ensuring that it is the right demand that gets the dollars, right, that could help to put, to ease the pressure.
Ghana used to have single-digit inflation. It's run up now to double-digit. I think it's over 15%. What do you think needs to happen to see inflation in Ghana decelerate?
So, the inflation that Ghana is experiencing is not just peculiar to Ghana alone.
That's true. It's everywhere,
right? Yeah. This was worsened by the Russia-Ukraine issue, and we've seen global prices skyrocketed. So the impact of global crude prices, the pass-through, right, and has translated to higher energy cost for Ghana, right, and it has impacted the non-core inflation, the non-food inflation rather, right, where the energy typically sits. And some of the measures that have been put in place to contain this, we've seen the government come up to say that they will slash the price of PMS and the price of AGO, by 16 and 14 basis points respectively. Also, like I mentioned earlier, the hawkish transition is there just to contain this pressure. So, for over the next 3 months, the prognosis is for inflation to continue to rise.
Oh, wow.
But then, right, if we had this yesterday that Russia is already pulling back some of its troops. There are talks around, agreements, just to ease the ceasefire, basically. So if that can happen, we can see global commodity prices normalizing. That could have a positive pass-through for Ghana. But until now, the outlook is tilted towards the upside.
The average Ghanaian, so we've talked Euro bonds, we've talked credit ratings and so on. The average Ghanaian, inflation, everything you've mentioned now, although they've qualified for the World Cup, so they should be, the average Ghanaian should be at least, football followers, they should be happy. But how do they deal with these economic pressures?
It's interesting, right, talking about Ghana after they've beaten Nigeria. But then, the truth be told, right, it will take a toll on consumer wallets. We expect consumer wallet to be pressured. Businesses are just recovering. Such consumer wallet has a pass-through on settlements for companies, right? But notwithstanding, we think that some of the policies like the reduction in energy cost, PMS and diesel, the hawkish transition, and could provide a bit of respite. But for now, it's really damping on consumer wallets.
1 minute to go. How much of this can we attribute to the Russia-Ukraine war as far as everything Ghana is facing today?
So, like you rightly said, Ghana has been inflation numbers in Ghana has been sitting in the single territory, right? But the Russia-Ukraine issue, pass-through on commodity prices, higher energy prices, and elevated inflation for Ghana. Beyond this, high interest rates, businesses Take, for instance, example of Nigeria in 2020 when yields were relatively down. We saw a lot of corporate issuances coming into the market, right? Interest rate is higher at the moment in Ghana. It portends a downside for businesses who intends to borrow, for business expansion, right? So those are the two key areas, that are largely been affected. And then reversal capital outflows, which has a negative pass-through to currencies.
Economics, it's such a fascinating subject. So much to discuss. Very in-depth. Olaolu Boboye, economist with CardinalStone. Thank you for taking us through the Ghanaian economy. They've passed the E-Levy bill. We'll see how things work out over in our neighbors over there.
Yeah.
Thank you for joining us.